What is up, everybody? Logan here coming at you guys with another video. And today we're going to talk about some more of the recent trades we've taken in the Discord, but also we're going to talk a little bit more about volatility reduction in this video because the VIX, which is a very important key for anybody who is into trading options or really anything, right, is understanding volatility. We're down to 12.45, basically the lowest that I've seen it in a very, very long time. And I know we've flirted with like 13 a couple times. But overall, like here's my standard deviated chart as we first hop into this video. But we have a lot of selling that you saw up here. Volatility got crushed. Now we're back in the buy zone, right? So something I like to kind of keep in mind as we spend a lot of time around the mean, the VIX is way down right now. So I'd be a little cautious if I was selling any put credit spreads or anything bullish, because anytime we get up in the nosebleeds on the S&P on these time frames, the market does tend to like to revert back to the averages over here. So I just want to say that really quickly out of the gate. So as we hop into talking about SPX, these are the Discord's trades that I've been taking, and something you might have noticed since volatility started to fall as we come on to, just over 190 trades this year, is I'm actually taking further out DTEs now. So with volatility getting crushed this hard, the premium, and for my risk reward and kind of how I want my life to be set up, I spend a lot of time focusing on the duration of a trade, right? You see me go from 0 DTs to 1, and as volatility continues to fall, those DTs get longer. 2, 3, 4, 5 DTEs. I really try not to go further than that unless I'm doing any form of management. But at this moment, we're up $6,349 on the year. That's our reference P&L if you did 2 contracts with us throughout the year. That's just over 30% on the portfolio. We're like 33 right now, which is cool, right? And we're planning to finish the year out pretty strong. If you guys would like to come trade with us and follow along with the trades in the Discord, the link is below in the description. If you use the code AMP, you get 10% off the first month. We spent a lot of this last quarter just in a downtrend. We were declining. If I zoom out a little bit more, we come back here, right? We spent pretty much since about the peak of the end of July, we've been stuck in this downtrend for the last half of this year, right? And we had that massive rally that started right around Halloween. And that looks like we're starting to finish up on that as well. But you also have to remember volatility did fall, and we have a lot of year-end rallies as well. So I try to keep that in mind as I'm trying to look at goal setting and kind of coming forward with this method. What I like to do around these time frames is, I like to sell a lot, put credit spreads when I get down, down under one standard deviation to the downside, or even if we're hovering down here on this white line, I'll sell a lot of put credit spreads. And then for me lately, it's been just call credit spreads because we're up in the nosebleeds. We've slowly been creeping up, but they've actually been giving out quite a bit of premium above 4,600. So that's been nice for us as far as like putting trades on. So a lot of the work that I'm doing around here is around the expected move. If we come back to the Discord, we have the expected move chart. This is the next week's expected move, 46 points in total, super low, right? Like I would expect us to exceed 46 points up or down, but that's what we have tracked for this next coming week. And then also over here, we have 20 points for the next day's expected move. So I'm trying to keep that in mind, right? As we kind of come into the end of the year, low volatility, that all that means is I'm going to have to shift to longer duration trades, which I'm totally okay with. I kind of prefer that because it just gives me more time. And I like time when I'm a seller, right? Because every day you're going to collect some volatility decay unless the VIX starts to really shoot back up like 20 to 30%. But besides that, right, you're just collecting that volatility decay over time, which is really nice, right, for sucking in that premium, especially when you're an option seller. And these expected moves are so low, that you really shouldn't expect anything too crazy, like a 0.4% move up or down, super mild, super calm, really not a lot of money to be made. As far as like purchasing options, if you're somebody who's used to volatility, maybe a stock like Tesla, where you like those moves, those 5% days, the S&P should stay fairly calm for a little bit, but overall, I think we're a little bit extended as well. So I try to keep that in mind too. But that's what most of the strategy is, and focusing on any gap up or gap down on the S&P. We've had a little bit of those, but nothing too crazy. We have a couple open gaps below at the moment. The VIX, like I said, is super important to keep in mind on where we're at there. We went up to 22, shot down from there, and we're back to the lows. And we've hovered around, we were around this area in June, but at least in July, we got a little pop back to 15. So as the volatility falls, I just go into longer term trades, but still like short term, if you realistically look at the stock market, right? Like 5 days is not a very long time to be in a trade. This market still likes to spend a lot of time between those 3 to 5 days of red and green. We're still doing that at this moment. If I zoom out and go to my daily chart, and even if we're referencing this rally, you'll see a handful of red days. Looks like there's 4 since Halloween, which is a really remarkable run. But overall, if we're looking at how the market typically moves, 3 red days, 2 green days, 3 red days, right? Then we had 7 green days in a row, followed by 2 red. Then we were even back on 3 green. Then we got a red. 3 green, got a red. So as we kind of look at how that market trend shifts, it gives me a little bit more of an edge of selecting strikes and trying to pick where I want to put my trade to keep myself at this 99% win rate and to continue to outperform the S&P every year with trading, right? So I'm not out here doing like 100%. I'm not out here doing 300%. Just 30%, 40%. I'm good with that, with how the market's been moving. Ultimately, I'd love to cross like 50 to 60%, but also then, we have to be somewhat mindful of taking too much portfolio risk, because that's just not the mindset anybody wants to live in. Is like waking up every day full anxiety, trying to figure out, what do I need to do? What do I need to do with the trade? I try to keep that in mind as well with how I'm trading, and especially psychologically, that can wear on you if you're doing that every day, right? Like, just not a fun spot to be in mentally. But we do have position sizing over here. I like to just do that 6 to 8% of my portfolio. Trade timing, I take the same trades around 2:30 every day. A lot of 1DTs, but as we're shifting further, still going to take them at the end of the day. It's just not going to be, it doesn't mean as much because you still have multiple days of time that need to pass to collect that premium. Choosing strikes, I like to go around the psychological levels. Like right now, we're at 46.05 for the short strike. I like to be above 4,600 coming into Monday. So, today's Friday. Risk management, and I like to roll these trades before they get in the money. And then I also have a huge key of rolls and a bunch of other things I do for risk management that we've gone over in a lot of the other videos. But I just try to set pretty solid and proper expectations. If I could even do 20% every 6 months, I'm pretty happy with that. So a few percent a month, and I'm not risking very much of the portfolio. I'm just trading very frequently. But like I said, right, like I'll have a couple months of bad movement or sideways movement, kind of dealing with the market back here. But here's what the P&L looked like for the year if you were to trade 2 contracts visually, what your portfolio would look like following every contract to get all the way up to where we are now, around that 6,500 per 2 contracts mark. But that's one thing, right? Like, if you look at how identical this management time was to this management time, and then what happens when we move on from a roll, it's always very nice, right? Like, there's always that nice upswing. You see more of that staggeredness and then an upswing again. So I wouldn't be surprised if I get stuck in a roll here shortly, but that is what you should expect trading credit spreads, but it's still pretty linear, right? Like, if you were to draw a line from here up to here, even though we have that downturn, that's what a lot of these strings of wins cause, right? You get that time where the market flips against you, and then you have to ride it back up. So overall, right, looking at the P&L here on the trades is very similar to kind of what I've said for setting expectations. Is you're going to need to really focus and hone in on that, because if you can keep that long-term positive expectancy view, it's a lot easier to manage these trades instead of, I need to make this much money this week, or I need to make $1,000 a day, and creating all these ideas in your head, which are great. Don't get me wrong. Like, go set your goals and go achieve them. I don't want to hold anybody back ever. I don't think, there's no reason to ever pull somebody down, right? Let people go try to achieve their goals and just set the expectations that they find proper, because there is a certain level to where, like, if somebody's making 500% per year on something, like on their whole portfolio, there's probably a lot of risk that is being taken, right? So you just have to set really proper expectations and just also understand, like, if you have a long-term positive expectancy, to at least for me, that's all I need to want to try something, right? If you don't have that and your math doesn't line up the way it should when it comes to looking at anything, an investment, buying a business, whatever it is, like, I would just throw that out the window personally. Like, if it doesn't have a long-term expectancy, there's no reason to really do it, right? I think about that all the time. Whenever I'm trying anything, a new strategy, whatever it is, I just really look to, can this be repeated, right? So that's going to be everything for me in this video. Like I said, if you guys want to come join the Discord, the link is below in the description. Use code AMP and then you'll get $25 off the first month. And I'm also running deals quite a bit too. If you guys would ever like to sign up for a longer time, that's discounted like up to 30%. So totally up to you guys, but that's going to be everything for me in this video. I really appreciate all the support and I will see you guys in the next one.